Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Thursday, the 2nd of December. Starting off with Afritin, which is still trying to escape that sort of falling wedge triangle that it's been in since the early part of the year. Resistance line to break around 5.2. Probably the easiest way forward here is to wait for an end-of-day close or a weekly close above 5.5 pence, which has been a resistance for both October and November. Stop loss obviously back below 4 pence, but the upside potentially up to 7 or 8 pence once we finally emerge from the consolidation. On to Beowulf Mining, which has been a reasonable market in the recent past. I suppose I'm just showing off really. I think we've had this stock but first break the 7 pence level, which was the initial target here, the May resistance line, top of the May rising trend channel. And now we've actually got up to the sort of more optimistic target, 8 to 8.5 pence, which we had before. So I suppose the obvious thing to do now is try and work out what the next level may be. That's probably the upper parallel of the May channel, so perhaps up towards the 11 or 12 pence level, perhaps by the end of January, something like that. So we're looking pretty strong for Beowulf as long as it's above 7 pence, which was that initial target. So above 7, looking for 12 on a 2-month view. Moving on to a stock which I don't think I've covered before, but at least the EPIC code is relatively easy to remember. Here we've got a situation where looks like there's been one of our more favorite setups, the bear trap gap reversal, so gap down and then headed to new lows and snap back above the old low, which was 74 pence, above 74 on an end of day close basis. We see the shares heading up to the last resistance on the way down through into the low 90s. So a nice looking situation there, helped along by the way that even with the lower November support, the RSI didn't go as low as it did in October. So classic bullish divergence there. So a lot going on there, a lot of positive stuff going on there on Big Blue Broadband. Moving on to one of the old stalwarts of the Bulletin Board Heroes. Here we've got Chesterfield, which I think is just it's in this beautiful mid-move consolidation, just either side of the 200-day moving average, which is quite typical. I suppose we saw that sort of thing back in April, so we're looking for a repeat of that. So on that basis, above the recent swing low at 9 pence, we could head up to the top of the broadening triangle from February at 14 pence, maybe as soon as the end of next month. If you're cautious, maybe just wait for an end-of-day close through 10.25, the initial November peak. Onto a stock which is done what it should have done once it actually delivered the rebound, breaking the that resistance line there from back in May. The current situation is that above the recent swing low of 29 pence, we could head up towards the 200-day moving average as high as 57 pence. So good recovery, maybe a surprising recovery there for Genedrive. If you're a fan of the shares, and there may be a few left, the best case scenario target here would be the top of that broadening triangle from July, as high as 80 pence, perhaps by the end of next month, as a best case scenario, of course. Moving along to stock which keeps on delivering great fundamental updates, but maybe the share price slightly behind that. The good thing, I suppose, for Jubilee today is the shares have gapped up after the double support bounce at around 15 and 3/4 pence from back in October, above the 15 and 3/4. We're looking for at least 18.5 over the next couple of weeks maybe, and still dreaming of the top of that rising trend channel from July at 22 pence, perhaps by the end of January, especially while that gap holds. So if we see the get through today without the gap being filled, then that would be a big sign that the shares are ready for a new leg to the upside. Onto a stock which I've carefully avoided over the years, Minyan. Here we've got a situation that the shares have actually snapped that line of resistance from back at the end of July, above that line at 0.98. We could see the shares head back towards the 1.2 area, which is basically the pre-July support for the shares. But I suppose the big hope here is that with all the bullish divergence of recent months and the gap reversal that we had, we gapped down last week and then have rebounded well, then this could mark the end of the extended bear phase for the shares. One of the more popular stocks in the pharma area is N4 Pharma. Here we've broken that line of resistance from February. That was around the 8.15 pence level, and above that on an end-of-day close basis we could head to the top of the broadening triangle from back in March, as high as 11 pence perhaps by the end of next month. Stop loss obviously back below recent 7.3 pence support. Just a few stocks to go now. First is Pipehawk, which is one of the rare positive setups that we have at the moment. Rising trend channel from back in December. Initial target here up to 20 pence, which maybe could be hit over the next couple of weeks. If you're a fan of the shares and a momentum trader, then perhaps the target here up to the upper 20s, which is a line of resistance from July, so the top of that broadening triangle from back in July, perhaps as soon as the end of next month. Going on to Predator, which obviously gave its supporters something of a headache over the summer period, but looks as though we're finally emerging from the darkness. Here you can see a resistance line broken there from back in October, and 2 solid days since then. The view now is that while we're above the 50-day moving average at 5.5 pence, we could see the shares head back up towards at least the late October resistance at 6 3/4 over the next couple of weeks, and that would mark the start perhaps of a more extended recovery. Big update from Tirupati Graphite today, and still looks as though shares have found their feet somewhere in the mid-60s. Initial target here up to the upper 70s, so the top of that channel there from June. But the big win would be if we could get a weekly close above 78 to take the shares up to the 200-day moving average area at 101, maybe over the next couple of months. So let's see how that pans out. That's it from me today. More updates tomorrow.